In a late trade on Friday, oil prices dropped to $86 per barrel, and today the asset has kicked off the week with the strong gains and is already approaching $89. Such a steep rally can be attributed to the fact that OPEC Plus are set to hold an emergency meeting on October 5 to consider cutting oil output by 1 million barrels a day. This move will mark the cartel's second straight monthly cut after reducing output by 100,000 barrels a day in August. The formal reason is a global recession and the resulting weaker energy demand. However, it seems that OPEC Plus members are actually trying to correct the recent oil prices decline. After all, oil prices notched the fourth straight month of losses in September, mainly due to a surging dollar. In any case, even rumors have already led to higher oil prices. Apparently, the asset will continue gaining value and consolidate above $90 per barrel by the end of the week. Since the opening of the new trading week, Brent crude oil futures have jumped by more than 3%, driven primarily by an OPEC statement. As a result, the benchmark showed its downward cycle from the $90 resistance level above the mark of 88. To resume its slide, the quote needs to return below 86, otherwise it may well head for the resistance level of 90. Gold remains relatively stable. The metal continues to drift around $1,660. However, the asset may come under downward pressure as early as this week when the EU reports data on producer prices. Statistics will allow market participants to figure out the European Central Bank's further steps on interest rates, which will lead to a resumed decline in the gold prices. After all, sharper interest rate hikes will dampen demand for such safe haven assets as gold, since investors are expected to shift their focus to the government debt market. In order for the price to rebound from the resistance area, it needs to fix below 1,655. A scenario surging a continued uptrend will be relevant if the price consolidates above the level of 1,690, at least on the 4-hour chart. And now let's consider the situation with the ruble. The Russian currency posted gains on Friday after 4 new regions officially joined Russia. The reason for speculation was concerns over the new sanctions against the Moscow exchange, in particular the National Clearing Center. After all, sanctions against this center could have stopped trading in the dollars and euros. The absence of sanctions against the financial institution led to a short-term rally in the US dollar. At the moment, speculative interest rates in the market, therefore speculation attention would be analysts of incoming reports. In addition, the market was affected by fears about the serious escalation of the conflict in Ukraine up to NATO intervention. However, these worries were not justified, which contributed to the ruble's stabilization, and everything was back to normal. The only thing that can somehow change the situation in foreign exchange interventions by the Ministry of Finance. And the market has been waiting for them since early summer. However, there are no reactions and specifics on this matter yet, and this means that the ruble has every chance of resuming gains, albeit modest. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.